to just try to get those ordered sooner. Payoffs, the verifications, and I think the closing, your assembly line, the closing processor should maybe get involved sooner, not wait for the number 2 person to tell them to start. But I think maybe the closing processor should look at all of the locked loans and look at something like maybe 7 days or 10 days before the expiration of the lock, and use that as a criteria to start working on it, because they know it's going to be a rush sooner or later, right? That's a hard stop. So maybe using that as the indicator instead of waiting for number 2 to tell number 3 to get started.
Yeah, that is, some of these, if we order too early, it's not good. If we order too late, it's not good. So it has to happen at the right timing.
Right.
And we have a lot of problem right now, and partly because our assembly line is so new. Plus, a lot of them are also new.
Ok, chỉ còn một chiếc xe 200 mấy chắc là để đó đi.
Plus, some of the processors are new. Our process are new, and we are running into a problem of capacity, as we have too many loans, and everyone too busy working and not focusing on what needs to be done. And for example, I think 2 things that we need to improve right away, and all of us can do, is like this morning I email everyone. I say that please pick up the phone because we need to be more professional. We need to communicate better. I think the LO or LOA need to talk to the borrower. When you get the new loan assigned to you, pick up the phone, introduce, and say that if you need anything, reach out to me. This is my email. This is my phone number. That way, the borrower doesn't have to go after everyone. I see that the borrower email everyone and then calling everyone. And then the LOA doesn't answer, he calling everyone else. It's like crazy. And by our rule, we have to return all phone call. So if the customer call 3 people, all 3 people have to call back. It wastes everyone's time. And that's why I ask everyone to try to pick up the phone. We have a division of labor. LOA need to talk to the borrower. Processor need to focus on processing loan and not talking to the borrower. So we need to stick to that. The LOA should be available and try to talk to the borrower, take care of the borrower. That is their job. So that's why I keep emailing everyone. Be professional. What I mean is when you communicate to the borrower, you let them know, you introduce yourself. If they need anything, contact you. That's the first thing. Second thing, you always keep the borrower know what is going on. Like, okay, your loan have been submitted. We completed the first step. Now the next step is the lender will review and approve it. This lender will take 2 days to approve it. When they approve us, we will call you and let you know. We will call you and let you know what are the conditions so that we can take care of the condition. It's simple thing like that we don't do. We let the borrower wait and wait and wait. It's just so simple. I email everyone. I told everyone, always keep the borrower informed so that they don't have to shoot email to everyone and call everyone. Hey, where's my loan status? Can I lock? Why it takes so long for the lender to approve? They keep chasing everyone and complaining. And it's not good. It's not healthy, and it's wasting everyone's time. You need to be good in your role. Your role as an LOA, you need to do a good job. You need to be a very good communicator. And the processor should be good at processing loan. Everyone needs to focus on your task. So I'm begging everyone, try to do better in your job so that the other person don't suffer. Because right now, if the borrower cannot reach out to you, you don't pick up the phone, he will keep calling, and he'll call in the office, he'll call in the processor, he'll call in me. It's crazy, and everyone have to return phone call too. I have a policy. In San Jose or Westminster, we have to review all of the phone call log and return all of them. So if you see 5 missed calls, we have to call them all back. That is the company policy. So if the LOA don't pick up the phone, the borrower will call everyone else, and we have to return his phone call, and it's wasting time. So I'm begging everyone, I know you're busy, everyone busy, but we have to be smarter when you talk to the customer. Try to let them know that, oh, we are very busy, but they should not worry, because the turn time is 2 days. If it's 2 days and 3 days, you don't hear from us, then you can call me and let me know. You know, always have a good communication, maintain the message, let them know what is the expectation. Okay, so not only phone, but also email. They will email everyone. And nowadays I see email, the customer email everyone. Normally we get 200 emails a day. Now we get 500, 600 emails a day. And you don't know if you should respond or the other person should respond. It's a big mess. So make sure the borrower understand what's going on. It's important. And know if they have questions, they contact you. Okay, so I'm going to talk about vesting. And in America, we have 50 states. Some states are community property states, like California, Texas, Nevada. Those are community property states. So we have different types of vesting, and the different types of vesting. The most common one for California, for the community property state, is husband and wife as community property with right of survivorship. We always choose this one if they are husband and wife. Okay, and then the other two types is, if it's one person, it's easy. There's nothing to worry. You know, Thon Nguyen, a married man. That's it. It's complicated. Let me explain to you. The vesting need to have 3 components: the name, the marital status, and the last part would be what will happen if you die. So let's say there's brother and sister on the loan on the title together. Then we need their name, right? The name, obviously, we have to know who is the owner, right? So we need the name for sure. Why do we need the marital status? Because so that if something happens, your wife, your children can be the beneficiary. So let's say if you are married, then what will happen if you die? If you're the owner, right? You own the house and your status is married, then what will happen if you die? So the last part is what to do. And the county use this to determine if something happened to you. So if husband and wife as community property with right of survivorship, then if one spouse dies, the other spouse become the owner of the house automatically. There's no need to do anything. We only need to update the vesting. Bring the death certificate to the county, ask them to update it. Simple. So that is the one simple case. We need to, all of the vesting have to have the name, the marital status, and what to do when you die. So I need to look at some samples so I can explain to you. Let me see. Let me share my screen with you. Anyone have any question while we waiting? Okay. So, okay. Let's scroll down this list. Sole ownership, you own the property by yourself. So you have to say, are you a single man or woman? Or are you an unmarried man or widow? So your marital status right here, right? Co-ownership, two owner. Normally, if you are the only person, let's say you're a single man or unmarried man or woman, you die, then they will look at your living trust. If you don't have a living trust, it becomes a probate process. You have to go to court to determine who should be the owner of the property. The probate process. So that's why it's so important to have a living trust. And as you know, we run into problem with some loans when the borrower won the title of the property under the living trust. So the title can be under your name or your living trust. And if it's under living trust, then whatever say in the trust will determine who is the owner. Okay? So UWM allow title to be under your family trust, but Quicken Loans doesn't allow that. So Quicken Loans, we have to, if the lender is Quicken Loans, when we close the loan, the Quicken Loans require the title to be under the borrower name. But then Escrow will prepare, title company will prepare another deed to move it back to the trust right away. So the borrower don't even aware. So I hope you understand this, right? Depend on the lender. Some lender allow title to be vested under the trust and some don't. So now you understand about trust. And then married man or woman at his sole and separate property. That means the house belongs to the man, the husband or wife only. The other spouse doesn't own it. Or domestic partner. If there are two owners, then the most popular one is community property, normally between married couple, husband and wife. The community property with right of survivorship. That means one person died, the other person take over the house. Joint tenancy would be the same at community property with right of survivorship. It is exactly the same. The only difference is very tiny. It's very tiny difference is the tax, I believe. let's see, if one die, then the title will automatically convey to the surviving joint tenants. The difference between joint tenancy and community property is a little bit about tax, but it's almost nothing. Tenancy in common. So let's say there's a brother and sister owning the house together. If the sister die, okay, brother and sister own the house together, each of them own 50%. If the sister die, her 50% go to her husband or children. It doesn't go to the brother. So that is tenancy in common. And it doesn't go straight to the brother, okay? And sometimes you can put the percentage of interest, like 50%, 30%, 10%, 1%. You can put the percentage if you want to. A lot of title companies, they don't know how to write the vesting properly. So you have to try to learn it, how to write the vesting. If later on we have some sample, I can explain to you. The owner can be corporation or partnership or a trust or LLC. So one question that you will hear a lot is, my house is under LLC, can I refinance? My house under my company, corporation, can I refinance? The answer is yes, but you have to be the owner, not the LLC or corporation. So the lender requires that the house has to be under your name. After that, you can move it back to your corporation or LLC. Okay, and if the rental property is under the LLC, if it has positive cash flow, it cannot be used as income toward qualification. A lot of property are under LLC, a lot of them, for liability reason. Let me explain a little bit more. LLC or corporation or partnership are legal entity. They are legal entity. Entity is a person that have the right to own properties, that have the right to owe someone money. It's the same thing as the person. So a company can own property. The company can owe someone money. The company is act like a person. That's why we say they are legal entity. They are legal, and they are an entity. They can just like another person. So these entity, because they are entity, they have to pay tax. They have obligation to pay tax every year. And because of this abuse, and a lot of people open up a company and keep filing loss and they pay no tax. So there's a minimum tax, annual tax of $800 in California. So if you form an LLC, you have to pay tax. You have to file tax, and you have to pay minimum tax every year. So that is about vesting. Make sure every vesting, you have to have a name, marital status, and the last part is what happened. Is it community property or joint tenancy or tenant in common? Okay. So the next item is property tax and transfer tax. In America, we deal with tax. You cannot avoid tax. And we pay a lot of tax, all kind of tax. You make money, you pay income tax. You own a house, you pay property tax. You sell the house, you pay transfer tax. Those are just three basic tax that you have to deal with. There's a lot more tax, but those three tax you have to deal with. Property tax is the annual tax you have to pay to the local government, county, to the county, and sometimes city. That is the property tax. Transfer tax is like when you buy a TV, you buy a refrigerator, you have to pay sale tax. Transfer tax is something. When you sell your house, you pay transfer tax. Transfer tax varies depend on the city and county. Some city and county charge very little transfer tax. Some city and county charge a lot. Like Alameda County in California, they charge 11% transfer tax. Property tax, similar. Some states charge a lot of property tax. Texas is the state that charges a lot, over 3%. And this is one of the big reasons why the house in Texas is so cheap. People cannot afford buying a house and pay so much in tax. If you own $1 million house in Texas, you have to pay over $30,000 in property tax. And that is a lot of money. And you know, the government, they always run out of money. So the easiest way is to raise tax. So California realized this, and they come up with a law that the government cannot increase property tax too high. The government can only increase tax 2% a year maximum if the value go up. And the government cannot force you to pay tax if it's not correct. Let's say if your house value only 500,000, the government cannot tax it on 600,000. Therefore, there's an appeal process. You can appeal. In Texas, people appeal all the times so that they can save money on their property tax. It's easy to appeal. There's a lot of company helping the homeowner to appeal to save money. But in California, it's opposite. Nobody appeal, rarely. The reason is, let's say my parents, we bought the house $200,000 20 years ago, and now it's worth $700,000. It go up $500,000. But we pay tax only on the value of $250,000. Because every year, the government can only increase 2% of the value of the property. So there's a benefit to buy the property at low price so that you save money on property tax. You save that.
Yeah,
And, yes.
Sorry, yeah, I have a question. Sorry, I stopped you. So I have a question about new build house. And so when we do loan for new build, example, if they go with us, if borrower go with us, so how do we calculate the tax? Because like if we based on the taxes, right? The tax, for example, if it's this year 2020, so 2019 taxes showing, for example, for 500,000 house, only like maybe $1,000 in tax, because that tax is only on the land, not on the house, because it's new build.
Yeah,
So
I think the lender have a way to calculate. I don't quite remember. I deal with this before. Let's say the builder, they own a big piece of land, and the value of that land is $50 million, but they build 5,000 house on it. So it's a new house, so there's no value. So I believe there's a guideline that they will base on the value of the house, something. I don't really know the detail, but we can solve this problem. We have to work with the underwriter, with the lender.
Yes, because if we calculate it wrong and we collect it wrong, so later on the borrower had to come back and
normally every county have a tax rate. So depend on your county, you know the tax rate, you multiply by the value of the house. That's it.
Okay.
Yeah.
So we don't have to base on tax cert, right? We can collect that from the seller.
New house is an exception because the value is not correct. The tax base, there's no tax base. You have to, Okay. So for the house, this is very important for California. The borrower buy the house 20 years ago. The value could be $1 million now, but they pay only very little. They pay only $200 a month. If a lot of owners are afraid that if they refinance, their property tax go up. That's why you need to explain to them that in California, as long as you don't change ownership of the house, there's no transfer tax, there's no property tax reassessment. Okay? So it's important that to explain to the borrower, there's no transfer tax. But if there's transfer of ownership, any type of ownership change, there will be transfer tax. And that applies to not only California, but all 50 states. We run into a problem with Florida. There's a transfer of ownership, there's transfer tax, but we did not disclose. And because of that, we are under disclosed. The closing cost, let's say $4,500, we disclose only $3,000. So we under disclose. Under disclose means we disclose to the borrower, hey, this is a refinance. When you do this refinance, you have to pay these other costs, $3,000 add up. But we missing the transfer tax, and that is $1,500. What happened is the rules say you have to disclose everything to the borrower up front. You cannot add more item, more expense to the cost and charge borrower last minute. Everything have to disclose up front. And that is why without the fee, we cannot submit the loan to the lender. We have to have all the fee in front of us so we can submit and disclose to the borrower. And it's important to get all of the closing costs up front so that we can disclose. And let's say if you are in an emergency, you need to submit soon, but you don't know the fee, please over disclose. Do not under disclose. Disclose more so that later on you can reduce it. If you under disclose, you cannot increase it. Okay? If you disclose 3,000 costs, you cannot go back and say, hey, it's going to be 4,000, 5,000. No. And if you under disclose, you might have to eat it. What I say means the broker have to pay for it. And it happened a few times just this week and last week. So this is money. There's money involved. So when you see a change of ownership, there will be transfer tax, for sure. And you must disclose. So that is why it's important to ask the borrower up front about their vesting. Who will be on the title? Is there any change of ownership? Are you adding or removing someone? If yes, there will be transfer tax, and you have to disclose properly. Let me see. So it's important not only disclose transfer tax, but make sure the borrower don't pay. Make sure the borrower don't have the their property tax go up, they might sue you. Because right now they pay tax $2,000 a year. If you don't careful, you make a mistake, you refinance and don't let them know ahead of time, their tax go up to $5,000 or $10,000 a year, and it's increased forever. So they lose a few thousand a year forever, and they will get mad at you. So it's important. And to know when the property tax will go up or not. This is California, okay? Then we need to file this form with the county. Whenever there's a transfer of ownership, we have to file this form with the county. It's called affidavit of assumption. And you have to decide what type of transfer. If it's between you and your company, between husband and wife, between parents and children, between grandparents and grandchildren, then the property tax will not go up. You have to check here between spouse, between husband and wife or parent, children. If you check here, the property tax will not go up. And if it transfer between brother and sister, the property tax will go up. And that is California law. It's very dangerous. One exception, if you are 55 or above, you can buy a house with same value or lower, and your tax will not go up. And that I don't think you need to know, but I just mentioned in case you want to know. See, this is the preliminary change of ownership report. You have to fill this form, and if you check yes in one of these items here, the tax will not go up, the property tax. Okay, let's move back to so you understand about transfer tax and property tax. Impound and escrow account. This is super simple, but we make mistake a few times. Impound account and escrow account basically is a piggyback bank, like account, just like your saving account. So to explain to the borrower, they will ask you, what is impound account? What is escrow account? Two different names, but same meanings. You can tell them that it's like your saving account. Every month you put in a fixed amount of money into your account to save it up, so that when we pay property tax and insurance, you have money to pay for it. So we open up a saving account with the lender. Every month you contribute, you put in some money, and when it's time to pay tax or insurance, the lender will take the money out and pay for you. And every month they send you a statement with the balance in that account. It's very simple. It's a saving account. If you tell them that, they will understand right away. But if you don't tell them that it's a saving account, they will have a hard time understand that. And the second difficult thing to explain is what is the reserve required? Why I have to pay so much into the impound account? Two regular questions they ask is, I just paid my insurance 2 months ago for the whole year. Why I have to pay again? And what you need to explain is, okay, you pay for the whole year. For this year, yes, you pay, right? What about next year? Next year, the lender will pay for you, right? So every month you need to save up now. You need to contribute money now, so that next year when it's time to renew, the lender will have money and pay for you. That is how you explain. Very simple. And to explain the property tax, same thing. Every month, you need to put in money to save up so that it's time to pay, you will pay. And then the follow-up question will say, why so much? If I refinance now, I close in August, why I have to pay 8 months of property tax? My house, 8 months is $5,000. I don't have money for that. But then you have to explain. If you don't pay reserve now, the lender will not have enough money to pay when it's time to pay property tax. And you need to sit down and explain to the borrower. Here, your property tax is due November 1st and March 1st. On this day, the lender must have enough money to pay, right? If you don't put in money now, they don't have enough money to pay. And here's the reason why they need 8 months. You put in 8 months now, you close your loan in August, your first payment is October 1st. So October 1st, you make 1 payment into the Impound account. November 1st, you get 2 payments. So you have only 2 months in there. That's not enough. That's why you need to bring money. And then the borrower say, hey, why 8 months? So much. Why so much? 8 months. My tax is not due until all the way to end of the year. And now we're only mid-year. Why I have to pay 8 months now? Then you need to explain. Okay, 8 months, because when your first payment is in October, that means you have 9 months in there. No, November, you pay 1 more month, you have 10 months. December, you pay 1 more month, you have 11 months. And then they take out 6 months, you have 3 months left. You keep calculating like that to explain to them if they need to, if needed to. And that is the only way to explain why they ask for 8 months of property tax. There's no other way, there's no better way. I'm 100% sure. You need to explain so people can understand, and you can understand too. I know some people, most LO don't know how to explain this. And most LO will not, because they don't understand. Some LO remember, like they have a table. Okay, if you close in August, you need 9 months. If you close in September, you get 8 months. There's a schedule. You can remember, you can cheat that way. But it's better to understand so that you don't have to remember. I don't have to remember anything because I understand it. So try to understand Impound. And to make your life easier, make sure to default Impound to no. Don't do Impound. It's optional. There's no benefit. Why would you want to go Impound? Because if you choose Impound, and then at closing, borrower have to bring in $7,000. I say, I don't have money. Then you get in trouble because you didn't ask them up front. Now you demand them, you ask them to bring in so much money. People remember this. When they do loan, they don't want to bring in any money. They don't want to pay any costs. So your goal is to reduce it, reduce the fund to close. And you need to ask them up front, do you want Impound account? If they say yes, ask them, you understand what it is. You know that you need to bring in money for reserve. If they're okay, then do it. If they don't, then say, if they don't understand, then explain and tell them that if you're not comfortable, forget about it. Don't do it. Save you time and trouble. Listen to me. Just try to save your time. It doesn't give you or anyone any benefit. So I see a few cases that you do Impound. At the last minute, borrower doesn't want it. You have to go back and change the document. It's a waste of time and customer will not happy. So the default, choose Impound equal to no, okay? Incident escalation. I will build into software, to our software to handle the incident. But right now, we have a spreadsheet to track the incident. So every day, I expect you to come in here, enter the information so that we can answer, we can support you, we can help you. And you can ask Vâng Anh. I email most of the people in California. You can ask, you can enter your information here, your question, we will answer you. And we expect that all the processor and LOA, if you have any condition that you cannot clear within 7 days, you must escalate. The biggest problem right now is that you don't escalate. You try to hold on to it, you try to solve it yourself, and it's going nowhere. And the last minute, you escalate, and it's too late. It's too late. You're not escalating, you are reporting a problem, and we cannot fix it because it's too late. You know, a simple thing, if you don't take care, it becomes a big problem. For example, if you don't disclose the cost to the fund to close, to the borrower upfront, they don't know. Last minute, you ask them to bring in money, they don't want it. So everything have to be early. The earlier, the better. Don't wait to the last minute. And I noticed that most processors don't understand about this. I tell everyone so many times in the meeting, in the email, that they need to escalate sooner, but they don't. And I think you're afraid that you ask and people think that you're not good. But please do not think like that. If you have questions, please ask. I myself, I ask Sari, I ask everyone. I'm not afraid of asking. There's nothing wrong with asking. So I expect everyone to ask. It's important. Ask for help. Don't try to solve a problem yourself when you don't even know how to solve it. And there's nothing wrong with not knowing how to solve it. You ask questions, please. And the rule is you ask your manager. If your manager cannot help you or don't respond to you in 1 day, escalate further. Keep escalate all the way to the LO of the loan. The owner of the loan is the LO. So you have to escalate all the way to the LO and let the LO decide for you and help you. If you don't, you're in trouble. The LO will yell at you for holding on to something and not letting him know or her know. So it's important to escalate. I use that word a lot. The two biggest words in our job is escalation and communication. We need to communicate really well to everyone and escalate when needed. Do not escalate too late. So I created a sheet and you can access it. You can type in your question and either me or Sherry or Vernon will try to come in and answer every day. So please escalate. Or even better, call the AE, call the underwriter, create a case, try to solve the problem. And read the guideline from the lender, guru. Go read the guideline. It's very important, okay? So I really mad when you don't escalate early and you wait to the last minute. It's not acceptable. It's not acceptable at all. It's not nice. It's not even, it's not forgivable because you have a problem, you hold on to it. Let's say you got sick. You don't tell your parents until you almost die. Then, of course, everyone's gonna mad at you because you hide something from them. Do not hide problem. You need to show the problem so that we can solve it together. And I run into this problem so many times already, and I'm really tired. Last item is subordination. Right now, most lender is very slow. So if the borrower have subordination, you need to make it clear to them that it's gonna take forever to refinance the loan because they want to keep the equity line of credit. Tell them it take a long time. tell them the rate is higher, and tell them to help you. I tell my, okay, one big problem right now with the processing team is you are, I'm sorry to use this word, you are lazy. You don't do it. You have the lender or AMROC do it for you. And at the end, it's a big mess because it takes them 3 weeks to get something done. Right now, the lender and AMROC and title company, they are overwhelmed. Why would they help you? It takes them forever to help you to get the subordination sent out. You can do the same thing quickly. It's not difficult. I expect that as soon as you receive the loan, you should know the house has equity line of credit or not. And if you have equity line of credit, find out who's the lender. Pick up the phone, call the lender, ask them to send you the subordination requirement. And then based on that requirement, take care of it, send it out. It's not that difficult. And right now there's so much delay because you don't do it. I know the problem, we are too busy, and I will create a department that do all of these things for you. Subordination, solar energy, living trust, condo questionnaire, those little things, those things that cause delay, we will have a department take care of it. I know your problem, and I will try to help. So anyone need help on this, we will help. Yet we are short of staff right now, and we are hiring a lot, and we will take care of this. Just give us a little bit of time to take care of it. I will make sure we will take care of it. I will re-engineering the whole process to turn a loan into something so simple. And we can do that. I know that I can do that. It's just right now it's way too crazy. But I'm in the process of solving that problem. That in the future, any loan coming in should go out clean and close on time, and nobody should have been pressure. Nobody will be under pressure. We will take care of it, and we can scale. So anyone have any question for me? Or you want any topic you want to talk next week? Please, I mean, you think carefully, because I don't process loan for more than 10 years. And I still know exactly what needs to be done because I understand the process, what needs to be done. If you understand, then everything becomes so easy. And that's why last week I said that if the underwriter asks you something, don't just do it. Try to understand why they ask for it. Read the guideline. Why they want $13,000 fund to close. Why they want to see 2-year tax return. Why they want to see year-to-date profit and loss statement. Why they want to see the certificate of trust. You know, every little thing have a reason behind it. Try to understand, and then you will be so much better. You can explain to your borrower. You do things so fast because when the underwriter asks for something, you know exactly what you need to do. Because after you do 50 loans or so, everything is the same. The condition come out the same. So you take care of it already, you know how to solve it. Okay, anyone have any question? Last call. I know everyone busy right now. Okay, so nobody, let me see if anyone chat something. No, nothing. Okay, thank you everyone, thank you. We are very, very busy now, and we might get more busy soon. So some of the officers working overtime this weekend. And please try to catch up. If anyone have any issue, any concern, want to discuss anything, just let me know. My goal is to, Loan Factory goal is to have 5 more branches and 5 states every year. We will add 5 branches and 5 states every year. and we will help each other. Every branch will help each other to, if we know someone that needed a loan in Texas, we refer there. We refer each other. We help each other. And if any one of you want to talk to me personally for anything, if you want to step up, you have any idea, you want to do something differently, let me know. Or if you know someone want to have a job, also let us know. We are hiring crazy. And I think if you refer someone good, we can pay you referral fee too. Okay, thank you everyone. Thank you. Have a nice weekend.
Thank you.
Yeah, thank you to them.